meet with you, I did some research in my archives. Look what I found from 1976.
In case against the graduated income tax,
This was our official paper in 1976. And I read through it before coming over here tonight. It's been a long time, since 1976. But as you probably know, the legislature is planning again in 2018 to put another battle for the graduated income tax on the ballot. The arguments in here, the numbers that are used, the average income in the state and all that kind of stuff which are used are totally out of date. They're from 1976. But the basic arguments are still exactly on the button. And I'm gonna share some of those arguments with you. I wrote them down because I didn't want to forget them. And you know, as we go forward toward 2018, at my age, I may not be around to help you out, but you're welcome to have all the facts that I can give you. First of all, one of the most powerful arguments against the graduated income tax is that no matter how it's worded on the ballot, it is open-ended. It allows for a graduated income tax. It doesn't say this is the limit, this is the highest rate, or this is the lowest rate, or this is where it kicks in. It simply gives the legislature the power to have different rates on different income groups, okay? Now, I don't know how else to say this, but giving the Massachusetts legislature that kind of open-ended power is sort of like giving Count Dracula the key to the blood bank. I mean, forget it. They will use that power. We all know they will, and they'll use it in the worst possible way to raise more money.
May I interrupt you?
Yes.
I understand Russia has 11 fixed income tax of 11%.
That's correct. And there are many countries in the world that have flat taxes. And to change the subject slightly, Russia has a lower corporate tax than we do by far. I forget the exact figure. And people wonder why businesses are moving out, you know. And what our elected officials want to do is build a legal Berlin Wall by making it illegal to move. And they're going to tax people that move and so on and so forth, which is the same thing that the Soviets did with the Berlin Wall. If your citizens want to move, we'll wall them in. Well, our people can't do that, but they can tax you to death.
The problem with that is you can maybe try and build a wall and try and prevent companies from moving out. What's invisible is the companies that want to get started and can't.
Can't, yeah, absolutely.
It's totally invisible, and we're suffering from that now in a devastating way.
Absolutely.
The cardinal law of free market economics is the Bastiat unseen rule. The jobs that don't get created, the things that don't happen.
That's right.
That the politicians can play with, because jobs that don't created, businesses that don't exist aren't a constituency to appease. And this recovery has produced almost no jobs from new businesses. And almost every previous recovery, all the advance in employment rates were from new businesses, and there aren't any.
And this so-called recovery, even the so-called job increase month on month, if you look at those numbers month after month, is not enough to keep up with population growth.
And they're more low-income jobs.
And they're low-income jobs besides.
Yeah.
Part-time.
Exactly.
So are you saying that tariffs are a problem for business?
Tariffs are a problem, yes. Yeah, of course they are. They add to the expense, and they are anti-freedom. It's as simple as that.
Tariffs might help certain sectors, but only if we're not selling outside our borders. You know. Well, the thing is that, and this is, the economy is going to change. We're going to, in the future, sell as much to China as buy from them. And it's right at this moment we decide to put the gate down.
Yeah, which makes no sense. Now, here's the second argument against the graduated income tax. Think about this. It is an automatic tax increase every year. Nobody has to vote on it. Nobody has to debate it. It's automatic. How so? Because people get raises. People work overtime. People take second jobs. Children grow up and people become two-income families. And when they do, their income goes up, which means they jump into a higher income tax bracket. So the percentage of their income that goes to the government goes up. So one of the reasons elected officials love graduated income tax is because they don't have to vote to increase taxes. It's automatic, and they get that increase every time you get a raise, or every time you get a promotion, or every time you put in some extra hours at work. You get whacked up into a higher tax bracket.
You didn't mention
Another
inflation.
question. Let's say I work a commission job. I heard under the Bush administration they passed a law where I get double tax on the commission I make.
I've never heard that.
Because I was working for Goodyear, my boss got, every time he got a commission or like a bonus, they double tax you to death on that. Especially in my work where if I say I get a bonus check for, let's say, if find a coworker come out of a place and they say for 9 days I get a bonus check. It's like $800 check they take out like majority of it out where I get like $200 out of
I have no knowledge of that.
Yeah. It's a classic marginal rate issue, though.
Yeah, that may have to do with the fact that the federal government does have a graduated income tax, and so you may have jumped into a new bracket.
Yeah, that week your salary would be high enough that you
so you'd be
bumped
jumped into a new bracket. Yeah.
Right, that's possible.
Okay, third.
And inflation is the reason it's an automatic increase every year.
Here's the third argument, which is in this paper that we put together so many years ago. We already have a steeply graduated income tax in Massachusetts. And you're going to say, well, that's not true. We have a flat rate. But listen to the effect of the flat rate. I put together some figures, and these are just numbers, but they will illustrate the point. Let's just suppose, for the sake of argument, that I'm a company executive and I make $500,000 a year. Okay? And let's, for the sake of argument, assume that you work for the company and you make $50,000 a year.
Well, she could make that.
Well, anyways, let's just admit, I'm using these as round numbers. Now, you don't have to be a genius to figure out that I make 10 times what you make. You make 50 grand, I make 500 grand. That's a factor of 10. Nobody can argue with the mathematics. Okay. Now let's suppose that we both have the same number of children, the same amount of medical expense, and it totals up to $20,000 in deductions. I'm just using round numbers. So your income drops to $30,000 and mine drops to $480,000, right? Okay. Now, let's use the round number of 5% tax. There's a surtax on there now, but let's just use the round number. I'm going to pay 5% of $480,000, which is $24,000. You're going to pay 5% of $30,000, which is $1,500. Now again, you don't have to be a genius to figure out. I make 10 times as much, but I pay 16 times as much in income tax. Do it again. I make 500 grand, you make 50. That's a factor of 10. We both deduct $20,000 for our children and our dependents and medical expenses. That brings you down to $30,000, brings me down to $480. We take that so-called flat rate tax, 5% of $480 is $24,000. 5% of the $30,000 is $1,500. Do the math. That's 16 times as much. That is one of the most steeply graduated taxes in the United States of America. It puts us 7th in the country in the degree of graduation. So we don't do it with rate, we do it with the deduction system. Okay? And people who say, well, the rich aren't paying their fair share, well, there's an example of where I'm rich and I pay 16 times as much in tax. Are you with me? Okay. All right. The next argument that I remember, which is in this paper, is the argument that a graduated income tax is bad for the general economy. Why? Well, we talked about startups. Where do startups get their money? From people who have leftover money. You can't use the bread and milk money or the kids' clothing money to start a company. You have to earn enough money to invest in a startup company. Oftentimes family members will get other family members to kick in if they want to start a barber shop or a restaurant or whatever they want to start, And it's discretionary income that's used. When you have a graduated income tax, you are launching an attack on discretionary income, and you are therefore crippling startups and new jobs. The other argument having to do with a graduated income tax hurting business is it's hard to attract talent. If you have a college graduate in Wisconsin who's looking for a executive job, a starting job somewhere that would be a managerial type job, and he finds out that New Hampshire has no income tax and Massachusetts has a graduated income tax, and he's being recruited in both places, guess where he's going?
Yeah.
And anybody that would argue with that is, I'm sorry, not very bright. That is an obvious choice that people would make. So graduating your personal income tax may give you temporary satisfaction that you're socking it to the rich, but what you're also doing is sending good citizens to other places.